Good day, everyone, and welcome to Price Action Training School Session 21. This is Revised Price Action Training School, and today we're going to be talking about the Mtf analysis. So before I start, let me tell you that the Mtf is actually one of the things that I really like to use. Preferably, the Mtf analysis is superior to any other single time frame analysis. And multiple time frame analysis usually takes either 2 or 3 time frames in order to analyze the full potential of the price and possible trade setups. Today's agenda is we'll be talking about the Mtf advantages, the Mtf on 1 hour and 4 hour charts, and how to align different time frames. So first of all, we come with the Mtf advantages. The Mtf advantages are we use higher time frame trend for trading the price. When I say higher time frame trend, I literally mean we actually piggyback trend and momentum from higher time frames to lower time frames. We always wait for the pullback before we make an entry. So we use higher time frames for trading the price, but we wait for the pullback momentum in order to trade the price. This is, of course, a bit successful only during trend trades. When there is no trend, guys, then simply you will not have any multiple time frame analysis. So at least that is how I do it. So I want to see the trend. I compare a trend on 3 time frames, but we will be talking about the different Mtf analysis, so we can compare 2, 3, and of course, the lowest time frame is always the time frame of entry. So the first time frame that you watch is trend time frame. The second time frame, you go lower, so from higher to lower. Second time frame is momentum time frame. The third time frame is entry time frame, where you wait for retracement. It's very important. The Mtf is very important for confluence. I call POC zones. POC zone means point of confluence, and it's usually where we expect the price to react. The advantages on 1 hour time frame are that it's suitable for both full-time and part-time traders. There is less chance of losing trades because we will be using momentum from higher time frame, that is 4 hour time frame, and we apply bigger targets. Of course, the Mtf can also work on 5-minute time frame, where you use 15-minute time frame for momentum and 1 hour time frame for entry for trend. Disadvantages: if you leave your trade overnight, there is always some sort of overnight risk where your trade could actually end up in a loss. But it's very hard to exit overnight, so you usually need to use some sort of trailing stop trail management. And also you need to pay for the swap if trading multiple pairs. Sometimes the swap is positive, so you will actually make some money, but usually it's a negative swap mostly. It doesn't matter, simply the swap, sometimes it doesn't matter because it's so little, so it's not like you will feel anything on your account. But the problem is that overnight risk, sometimes a good profitable trade might end up in a loss simply because there is a big overnight risk. Now, if you go to higher time frames and you want to trade on 4 hour time frame, then you use either daily for momentum and trend or daily for momentum and weekly for trend. The advantages is also suitable for part-time trading, but again, it's limited because you won't be having many setups. Mostly, guys, if you use 4 hour, it's okay because those are swing trades. But if you go to daily or let's say weekly time frame as an entry, then you will be mostly investing. It's not trading. You will not have a lot of trades. You simply put and wait a lot because one weekly candle will take 1 week to form. One monthly candle will take a full month to form, and with 1 or 2 candles you won't be getting anything. Usually the price, you probably need to wait for at least 6 months or a year or 2. So that is what I don't do. But investors simply want to take a look at daily, weekly charts. I don't look at weekly at all. I don't care about it. I can only take a look at weekly candle, but not the chart, because I'm not interested to trade on higher time frames than 4 hours. Targets are bigger. That's okay. Trailing stop is also good if you use it, and you can use pending orders. Disadvantages, again, overnight risk, because simply you will pay for the swap if it's negative. Then if things happen during the night, algo traders will probably push the price toward your stop loss, and then the trend will resume. That is usually how the things go, but there is a difference if you trade it on 15-minute, 30-minute, 1 hour, and 4 hour, because stops are higher. There are also macroeconomic risk if policy, fiscal policy, or any change in policy changes, then the trend might reverse, and you just need to wait for the stop loss usually to be hit. Bigger stops, and it's very slow, so it's not like it's active trading. The trading is very, very slow, and usually you won't be seeing a lot of action on those charts. Now, regarding money management, this is how I do, and simply, guys, for MTF trading, no matter if you trade 15-minute, 5-minute, 1 hour, and 30-minute, this is important. I always add 5 pips plus the spread to stop loss that we decide or you decided. We should never move our stop loss. We protect our trade by either scaling out or profit stop, and usually if you go on 1 hour chart, you protect after 25 pips, and it's always momentum dependent. So if you trade on intraday time frame 1 hour, then you need to watch your trades, because usually they will go 20-30 pips, maybe even more, but then suddenly they might come down, so you need to watch it. Now let's get back to charts. So I will show you how it looks. This is one of the things I do. It's actually my this is my Camarilla MACD MTF, and Camarilla MACD MTF is actually momentum based system, but you can of course order it for a very good price. The results are verified with my FX book, and this is what I personally use to trade. So it's based on the Mtf analysis, where daily time frame is used for trend, 4 hour time frame is used for momentum, and 1 hour time frame is used for entries. You can trade a lot of different pairs, and usually trades are above 75% successful. Okay, now if you don't have a Camarilla MACD, this is what I can show you, how you can maybe develop your own method, or you can actually try to do MTF. Let me just open the chart. So let's say that we don't use indicators now for this. So you decided to take entries on 4 hour. If you take entries on 4 hour, weekly should be your trend, daily should be your momentum, 4 hours should be your time frame for entries. You first go to weekly time frame, and this is usually done by placing trend lines and watching price patterns and such. So here, guys, you can see that general trend on weekly is up. You can always zoom out, and you see now this trend changed. The price has made a higher high, so you have a swing here, and now the price is retracing. If you go to daily, you watch that momentum is going down. So it's good, because if a momentum is going down and you want to buy the price, then you will get a better price. 4 hour is your time frame for entry. Then on 4 hour time frame, you need to decide how you will actually enter the trade. Usually what I do is entering on a pullback. So you see here, guys, there were a lot of pullbacks, and all of these trades here would have been in profit if you time your entries correctly. Now, timing your entries is something we will be talking about, but just for a general trend MTF analysis, this is how you do it: weekly for trend, daily for momentum, and 4 hour for entries. Of course, you can always combine different price action tools such as indicators, or if you want price patterns. For example, this is on 4 hour time frame on let's say on my Cameron McDF, I always use only one time frame. It's for 1 hour. But you see, there are different indicators that are coded and give us possible entries. Here, guys, on a 4-hour time frame, you will either use indicators or price patterns. This is, for example, inverted head and shoulders. Now we also have our own indicators. It's called ECS patterns, and with ECS patterns, there are also automated patterns that show possible entries, breakouts, and so on. So you need to decide the method how you enter on entry time frame. Now, guys, if you trade on 1 hour time frame, the logic is also a bit simple. Let's say you want to trade on 1 hour, then you use daily for trend, okay, obviously uptrend. Then you use 4 hours for momentum. You see the price is going up, so you want a pullback. You always wait for a black candle on 4 hours before you enter, and the 1 hour time frame is your entry. Again, I advise always to use some sort of indicators on 1 hour, because 1 hour is intraday time frame. The price might fluctuate and is very, very momentum dependent. Here we can also see inverted head and shoulders, a lot of these things. So it's very, very good. So yeah, this is basically the logic behind those multiple time frames, guys. If you have any questions, feel free to ask. I'm just giving you a general idea how to use multiple time frames, but if you want a system that is based on multiple time frames, then there is only one system I can advise, and that is what I use. It's called Camarilla MACD Mtf. And guys, here I will just take a screenshot. Ali is saying here that he has been a live member for a full year, and Nenad is great, teaching all details. Camarilla MACD system is great, and I suggest all audience getting it. So thank you, Ali. I mean, I really appreciate it. So yeah, that's it, guys. This is very nice from you. So yeah, guys, I mean, Camarilla MACD Mtf is purely based on a multiple time frame trading and analysis, and I really am very happy how results are showing, and you can see the message. So if you are interested, of course, in Camarilla MACD, feel free to contact me. That is the only intraday method I can advise. Other than that, guys, well, simple as other than that, I can just tell you guys, this is the primary logic how you should trade. 3 time frames. First time frame is trend time frame. Second time frame is momentum time frame. Third time frame, the lowest time frame, is entry time frame. I don't see any further questions. So next time we'll be talking, of course, we are going slowly towards the end of our price action trading school. We need also to mention a few more things, and of course by the end of price action trading school there will be some few things that you will need to do in order to get a free template for trading that is based also on my practical naked trading that I was teaching some 8 years ago, and that was the basis for other successful methods that I developed. Thank you for listening, guys. I don't see any further questions. Feel free to leave a comment below. I wish you a great trading week as always. Cheers.